I would say that going forward, we're in a buyer's market now. It's been a seller's market for the last 3 or 4 years. Not only did we have 0% interest rates, but central banks during the pandemic gave people money. And what do you think is going to happen? They're going to go out and spend it. The prices of everything, the demand for everything is going to soar. That time has passed. I was in Durham the other day, and I always have a look in the windows of the jewellers. And there's one jeweller there that specialises in pre-owned luxury watches, Rolex Tudor. They had more Rolexes in that window than I've seen in the last 3 years. Also, interestingly, one of the very high demand Rolexes from the last couple of years, the GMT MASTER 2 Batman with the black and blue bezel, they reduced that from 14,500 to 12,950. Now I think that's just the start. All these boutiques that have sprung up, the expansion of fine jewellery stores in major cities, I don't want to see those suffer. But it is a bit like the estate agent situation in the late 80s. They've all suddenly jumped on the bandwagon of a boom, which has now gone. Hello, welcome to 2024. What are my predictions for the luxury watch market, the watch market generally, this year and the next couple of years? Well, I don't profess to be an expert in the watch market specifically, but I do have quite a grounding in the way that markets behave generally. I was an investment advisor for a long time, and I had a very keen interest in booms and busts. In my adult life, there's been 4. The first was in 1989 with a property and classic car boom that came crashing down spectacularly in the early 90s, both here and in the rest of the world. I remember 1989 you could buy E-type Jags. They started off about £15,000 or less. In the 80s, you couldn't get rid of them. They were little rust buckets. By the end of the 80s, they were going for £40,000-50,000 for restoration projects. The properties that were maybe £200,000 had been £100,000 5 or 6 years earlier. In the early 90s, that all came crashing down. We had a recession. Estate agents that had sprung up everywhere in the late 80s disappeared in the early 90s. You couldn't sell a house. The prices dropped somewhat, but you simply couldn't move them. Classic cars stayed in the doldrums for at least 25 years, and I would say it's only the 2010s, the late 2010s, that classic car prices have shot back up. Now there is a pattern with booms and busts. They're never quite the same, but they do rhyme. That is a well-known phrase in the investment world. So the next boom and bust that I remember was the tech bubble in technology shares, 1999. I was right in the middle of the industry then, and what happens in booms and busts is most people get very carried away. The newspapers fuel this. You suddenly get, as technology shares started rising, 50-60% a year in the late 90s, the newspapers cotton onto this, and they'll start fueling it. Really, there's not a lot in the investment world, and anybody who's trying to grab your attention. Journalists, they want to sell papers. The fund managers want to sell their funds. So there is no motivation really to go against the herd. You have to think very independently in times like scary times like this. They are the scariest times when things are booming. And so everything fuels this idea that the market can only go in one direction. It was the same with technology shares in 1999. So you never know when it's going to crash, but what you do know is that things are very hyped. That's what you do know. So, of course, in the early 2000s, crash, boom, I remember advising somebody who had put all their money in technology shares. And I remember saying, look, it's fine for a percentage of the portfolio, but how about diversifying? Just move some. No, they didn't want to listen. Anyway, so fortunes were lost in the early 2000s. We had another mini recession, really. That was, and I would say a lot of the problems we have now go back to that time. Now, central banks, of course, and governments who work on 4 or 5 year electoral cycles and are desperate to be voted back in, always over-promise the earth and then find they can't deliver. So in the early 2000s, we had a period of falling interest rates. That was to fuel the economy, provide liquidity. By 2007, that had got out of control. So this is the third boom and bust that I remember. I would date the problems back to around the millennium, actually, with central banks generally trying to keep everybody happy, lowering interest rates, the banks themselves, poor regulation, huge lending, another speculative bubble, which is fine in the early stages. By the late stages, 2005, 6, 7, the property market had gone ballistic. Again, estate agents springing up once more, echoing what had happened 20 years earlier. The easy money, and of course that couldn't last. We all know what happened. Recent history now, 2008, the great financial crisis, bust, boom, explosion, everything collapses, desperation. The financial world is on the brink of collapse this time, and because things have gone too far. So that brings us to the period after the great financial crisis, which I would say is from 2009 to last year, 2022, give or take. We had a long period of ridiculous liquidity globally. Central banks printed more money than they've ever printed in the history of printing money in a 10-year period. Interest rates were dropped to almost zero. We had negative interest rates for a certain length of time. The bottom line was unrealistic flooding of easy, cheap money. Now, what do you think that's going to do to the prices of anything? And what that does, unfortunately, the longer it goes on, everybody starts to think that is the new normal. Well, and they borrow as much as possible at 0% interest rates. They buy £500,000 houses, £400,000 of that as a mortgage, let's say, at 1% interest. Now that was never normal, right? The period after 2009 up to 2022, that was abnormal. If you look at 300-400 years of history, that 10-11 year period was never normal, right? So unfortunately, what's happening now is things are returning back to normality. We've had a gentle slowdown. I don't think we've had recession yet as interest rates have risen. Let's see what 2024 brings. But certainly the era of cheap, easy money is over. And it's not as if this is a blip. Things are just simply returning to normal. 4-5% interest rates are quite normal. So what does that mean for the watch market, the luxury watch market? Well, I did say that I wasn't an expert on the watch market particularly. I'm also not an expert on things like fine art, which will always have a value to some people. Now, I would say the price of almost every asset, houses, luxury watches, art, they are going to drop in a lot of cases. I've seen Rolex Submariners that were £10,500 a year ago, the summer of 2022. They are now £8,500. Very good examples from the early 2000s. Rolex Explorers, the 36mm Explorers from the mid 2000s. They were up to £7,500, £5,000. I've seen some of those now at 5,700, so substantial discounts. Imagine if you had a Rolex and you'd paid £8,000 or £9,000 for it, right? 2 years ago. And now you lose your job. Just imagine what you're going to do with that Rolex. Imagine if somebody comes along and says, well, I'm not going to give you 8. Would you take 6? I've got the cash here. I can give you it tomorrow. I would say that going forward, we're in a buyer's market now. It's been a seller's market for the last 3 or 4 years. Not only did we have 0% interest rates, but central banks during the pandemic gave people money. And what do you think is going to happen? They're going to go out and spend it. The prices of everything, the demand for everything is going to soar. That time has passed. What I would say is, going forward, if you've had your eyes on a particular watch, be patient. More will become available. I didn't think I would see a Batman GMT Master 2 in a local jewellery shop in mint condition, reduced. That wouldn't have happened this time last year. It's happening now, and I think it's just a start. So I don't want to see these businesses collapse. I wish them the best. They're fascinating to go into. They're one of the jewels on the high street, watch retailers. I love them. But all I'm saying, going forward, if you've had your eyes on a particular watch, if there's been something you've had in mind, right, and you've been patiently waiting, I think the opportunity will come this year and next. And I think the opportunity should be there to negotiate. If the opportunity isn't there to negotiate, walk away. But leave your number.